All right, so everybody live, everybody got charts? Let me pull this up, just so I can see what's going on for everybody. Casual Wednesday. Hang on. Sorry. So many little things today. All right. So anyways, let's get going. Hopefully you have charts. Hopefully you have your coffee in front of you. How's everything? Sorry for the tardiness. Well, it wasn't tardy. I just got all kinds of things going on. One of my video cards is blowing out this morning. So what are you going to do, huh? That's how. Anyways, so hey, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. By the way, my name is Wayne McDonald. I am Chief FX Market Strategist for TradersWay.com. Hey, throw your diamonds in the sky. Thank you for being a client to Traders Way. No, you're fine, Alex. Fine. Don't worry. Don't sweat it. Don't worry. Hang on. It's just a picture. You're fine. Let me remind you that yes, this is risky, but here what the real reminder is I'm going to share technical analysis and fundamental analysis and other tricks of the trade per se that I've picked up over the years as a currency trader, and I should help be able to, you would think, right, help you sort of leap forward in your experience level. At the very least, you're not going to be sort of doing the same wrong thing over and over and over again. And it'll give you a focus on the things that you should be practicing. But at the end of the day, you will need to do the work yourself. Because at the end of the day, you're going to need to make your own trade plans. You're going to have to set your own bias. So eventually you will have to know technical and fundamental analysis. Eventually you're going to have to be good at long-term, medium-term, and short-term technical analysis and entering trades, managing your risk, and dealing with even the lifestyle risk of being a currency trader. It's normal for a currency trader to be tired or up in the middle of the night or working weekends. It's a whole lifestyle thing. So there's a lot going on and it's your life, and you're going to have to do it if you're going to survive this thing we call Forex. So first of all, please open a live account at TradersWay.com. All right, and if you're not ready to trade real money, just open a demo account. Give us an opportunity to earn your loyalty and respect. Okay, that's first thing. Second thing is you should post one trade plan per day at Forex.Today. It's really easy. Go in, just upload an image, type a few things in, and done. But it's like a personal commitment. You've thought about your trade plan. You developed your bias. You're documenting it, and it's a contract with yourself. Get yourself into a trade that you've planned in advance. Like, for example, you could even post today what you plan on doing in the next 24 hours. It takes you 5 minutes, but these are the types of things that a professional trader does. You'll see the market seems to turn at key levels of support and key levels of resistance. Why is that? Because professional traders have identified them in the future. Sorry, well, I guess it's in the past. And they were thinking about it not in the last 15 minutes. They planned this out: the trade of the day, the trade of the week, the trade of the month. Okay, so get really good at practicing all that. So utilize Traders Way, utilize Forex.Today. All right, so let's go through. We'll do sort of the normals here. Some of the dollar pairs, some of the yen pairs, and we'll do the commodities and that. Barry says Treasury's slumped down. Yep, what's going on here? Right, lots going on in the world. So let's just start in the top left-hand corner. Does everybody see this all right? Okay. We back out. Should we go? Is that too much? I think, I was going to change the chart, but I think we should leave this. Here's the daily chart for for Aussie dollar. And I drew this channel just sort of as a reminder. Okay. Now remember, the process should start with long-term fundamentals and long-term technicals. So I do things like this. I'm not going to make a daily decision. What I'm trying to do is say, I think this is bullish. That's all. And even if you don't know fundamentals, you're not that good on central banking policy, monetary policy, all this kind of stuff. I've taken class not only on monetary policy and central banking. I've taken classes on the whole oil industry. I've taken classes on international political economy. Fascinating, right? But you're not going to get that in day one. But you could do this and just say, well, on this daily chart, look at this. It seems to be generally up since December 2016. So you could say, in this context, you want to be more bullish than bearish. Now, it has been falling since the beginning of the year, but what do you want to do now? Well, you're kind of in this area where you're thinking in the next month or two. See? In the next month or two, maybe this turns bullish again. And that's where you start planning the future stuff. So if you happen to be a bull now, we don't know if we were a bull. And by the way, I kind of did this 2 weeks ago, so I apologize if you're just getting this, but it's a good review. If you started as a bull and you thought, well, in the month of April, this might turn bullish, you want to start using things like longer term charts. This is the daily chart. You want to look left and find your levels of support resistance in the past, but you also want to use monthly pivots. And you'll see that this, when I zoom in now, the assumed bullish move using monthly pivot points is this. And I think that would be influential to your decision-making process to see that. You start way back here, and you're thinking, well, based on this, we're getting closer and closer and closer to the bottom of the channel. Channel is subjective. Channel is like training wheels. They don't they don't keep you completely balanced. They just keep you from falling over, right? But now you're like, oh, right, sometime soon this might go up, and then you zoom in. This is still the daily chart, but that is the swing. Okay, this X is last month's target. All right, and we never even got there. And now, if you're a bull, maybe this is heading up, and you're going to find that very interesting, right? Drop it into a smaller time frame. Now you're trying to get your day trades and your weekly trades. Okay. Now it's Wednesday. One of the things we covered on Monday was if you happen to be a bull, this would go up. Why? Because you're already a bull. You were a bull on that Monday, and here it is Monday again. It's still a bull. And this was the one I traded on Monday. Remember that, guys? We were sitting right on top of this monthly pivot. I'm like, look, it's a quad bottom on the monthly pivot. Right? Do you guys remember trading this? Pulling the trigger? Remember I moved the stop, I put the stop under here and everything? Yeah. You'll remember it because I clicked the wrong button. I said, look, right? Look, this is where you'd buy. This is a perfect entry for a buy. Look at all these reasons why I should buy it. And I went up, and instead of clicking this, I clicked that. Oh, and I didn't notice because it was the middle of the webinar. And anyways, I messed it up. But you know what I meant, right? Now, the interesting thing about that is on a weekly basis now, not a monthly basis, the target is going to be up in here. This red zone is the projected high for the week. And we knew that on Monday down in here. Spectacular, right? Cool, right? So, well, what do we do now? I would say it's risky to continue buying. I might still get a bull. Remember, go back to the 4 hour, and then I have to zoom even further out on that. I might still be a bull long term. Long term meaning the next 2-3 months, right? But do I have to be a bull today? Or can I be a profit taker? Now, as a bull, I would expect this to continue going up because you can see I have a higher target, but it doesn't have to continue coming up, right? So then what could we do? Well, you could look left and say, if we get a retracement in this area, maybe I buy it. You could also use Fibonacci because this is a bottom, clearly, with a higher high, clearly. That means you could use a trend trading tool, like a Fibonacci extension tool. And that gives us this whole area here. Everything between those two gray lines is the buy zone. Okay? In fact, you would highlight this whole thing here. Okay? The 3A2 to the 618 Fibonacci extension. So I would think, if I were me, I would take my profit, let it kind of retrace down into here, and then start considering the new buy. But here's the interesting thing. This could be Friday when that happens. It could be Monday of next week. We just don't know how long it'll take to drift back down. Okay? So what time is it? It's not even 8 o'clock in the morning. 7:55. 7:55, New York City. Hang on, let me check something. Yeah. I gotta figure something else out. All right, sorry. Yeah, 7:50. Yeah, it's terrible. Yeah, there's a wrong date. I'll have to fix a date on something. Sorry. All right, so that's Aussie, and that's generally U.S. dollar weakness, right? And that's something that I've been telling you to expect for a while. And here's another version of this. I only have the fibs lined up this way, because typically if I have the fibs lined up this way, you're thinking long. I have this because I guess a week ago I was explaining how if you have price down in here, it's no longer an uptrend. It's like a reversal pattern. And then we set up a head and shoulders type pattern, right? So when we were down here, I said, this area and the one just above it would be the sell zone. In fact, the one a little higher, the one we didn't get, would actually be the more expected one. So anyways, so at that time, a week ago or so, we had this rising up into here. Let me just redraw this, right? And then I measured the distance of this to the neckline, so we'll have a neckline here, right? The gray area is the shoulder line. So then once I identified the neckline, what I did is I measured the distance from the peak to the neckline, put it from here, put a target here, and drew this gray line. This was Thursday or Friday of last week that we came up to the sell zone. Now Monday, it fell off the sell zone. We were in this green area now, which I said would be a bad area to sell. So what we would want is the bears to take profit, have it swing up into this week, somewhere between this gray zone. You can see I even have the ellipse here. Remember all of this, guys? It did fade, it did hit, and now we hit the target that we drew 2 weeks ago, guys. Look how accurate the target is. Can I get a whoop whoop? That's played out. That is now done. It's cool, right? Nice prediction point. Yeah, well, but that's not what it is. That's just me reading the charts. Yeah. Dun, 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 dun. Yeah. Yeah, it's cool, right? So now what? I don't know. I don't know, right? Yeah, I didn't think the camera was going to work. When you're all alone and your trading's cold. So, anyways, now you have to regroup. Do you see we're kind of in the middle? That's where I'm like, I don't know what happens next. Do you? Right? Do you know what happens next? I don't know what's going to happen. Our best case scenario, I think, is down in here, but okay. So that gets us down to about 25, about 24 maybe. Uh, yeah, so I don't know. All right, hang on. You're such a fool. Worry like you do. Oh. Scratching. You gotta stand up straight. You gotta carry your own weight. Your problems are going nowhere, baby. You got to get your crap together. You got stuck in the moment. You can't get out of it. So I don't know. That's kind of where I see where we are. Uh, I can see the scalps. Can you see them? What is the assumption? We just hit the target I planned out for us pip by pip. Remember, I got the target by measuring the top of the crown to the neckline and predicting this out 2 weeks in advance. Like, that's amazing, right? It's not me. Don't think it's me. I'm just a humble currency trader like yourself. Um, I'm still amazed that I'll do something like that. Again, it's not me. It's not a crystal ball or something. I measure the top of the crown. I zip it over there, and 2 weeks later we hit it and we stop. Oh, you like it? You like the gig? I'm going outside today. Woo! I'm going outside. I'm going outside. It's gonna be good. It is golf day. I golf once a year now. Yeah. So here's the thing. Is it plausible that other traders did the exact same thing? Right? So here's the thing, or at least the big movers, right? Right. What if you didn't do it? What does that mean if I did it very, very, meticulously, did it, other people must have meticulously done exactly the same thing. Is it, but would you have caught that? Because remember, we talked about this while it was still an uptrend. Okay? We were kind of in this, and I'm like, oh, look at that. It's a head and shoulders. It's going to drop next week. So I'm not doing that. I mean, to be a trader, you have to have as much reality as possible, right? Because we will tend to see what we want to see. So I would take out all the emotion that's involved here and say, have that son of a gun figure that out when we were here, right? And what do I need to do? I'm talking third person or first person? I'm talking like I'm you. So how would you, me, I? How does one set that up like that into the future, right? Like, remember how I say you should practice one thing and get really, really good at it? You should like crack that nut, right? It's like someone put a Rubik's Cube in your hand and you've never seen one before. It's all mixed up. And you're like, this is weird, man. This is impossible to solve. And then you see like a 9-year-old kid goes, like my son, he can do it with his eyes closed. Solved. What? Right? And someone leans forward and says, look, if you can do that, you'll make $1 million a year. And I'm like, son of a bitch, give me that cube. Right? Like, are there books on this thing? Oh my God, there's books. I'm going to buy every book. I want this book, and there's videos and DVDs. Like, that's it. Just give me that stupid thing because it's going down. Right? Like, I am going to figure that out. Right? Do you have that type of personality? If someone just showed you could do it, you're like, well, then I can totally do that. I hope you're kind of like that same sort of challenge. Like, I just put it out there, and clearly it's not my magic because there must have been 10,000 people that did precisely the same thing. So I would use that as like an opportunity to say, well, I would have missed that if I were me. So I need to master this, right? Lawrence, man, where have you been? Holy smokes, dude. Has it been, has it been 3 years, bro? Just popping in like that. Well, good to see you, bro. Good to see you, bro. Bruh. All right, so let's move on. .com. Again, that you should master something, right? Master something, guys. Just master something. All right, so we've done the CAD. I feel like we've talked too much about the CAD, but remember it started out with oil as well. Here's the EuroCAD. We used this as an example yesterday. We were talking with somebody about having a bias, how important having a bias is to trading. both knowing where to get in and get out, all that kind of stuff. It's a major part of the portfolio manager program. By the way, if my portfolio managers are here, let's meet up. Well, as soon as possible. If not today, certainly tomorrow. Okay. So we gave this case like, hey, look, it's a downtrend. But what if you were a bull? At the site, Emilio. So Emilio, you should check your account. You put in $5,000. It's now 25,000. Popped in the extra 20K. You okay with that? Should double check it. Don't go on vacation. Yeah. People are panic in the market and buy dollars. Well, first of all, stop having feelings, Barry. You too, Alejandro. Yeah, exactly. So we'll need it. Yeah. So yeah. So Emilio confirms. Woo! It worked. Woo! Emilio's like in Vegas now, throwing this money around. Look, I got all this money. So here's the thing, Emilio. Let's work really slow and steady together for the next 3 years and have you turn the $25,000 into 200,000. If you only get to 100 or 125, I'm okay with that. Okay? Yeah. But remember, slow and steady, steady and slow. Yeah, no, Barry, what I mean is don't set yourself up for that. This idea that you think the market's going to do that, or you think that, like, just see, you will find reasons to believe yourself. What I'd rather you do is simply say, all right, that trend is broken, and try to look at the shorter term purely as technical. Now, we know longer term things are more important, but I fear that you say, all right, the market's going to panic today, which now panic is an emotional word, and now you're heightened, and the dollar's going to get strong, and you could talk yourself into the wrong trade. I'm not saying it is the wrong trade, but I would rather you talk more about, the central banking policy or the IMF report, or than, okay, than the panic. Okay. Now, of course, if you're just scalping, that's fine. But anyways, the point I was trying to make here is that if you were a bull on this because that was your bias, or I gave you the bias, right? Right? You're the portfolio manager for the EuroCAD long. Okay, great. First thing you do is you look at this and say, well, it's not really bullish, so I'm going to be conservative. Sounds stupid easy, but almost nobody here does it. And nobody over there does it. Nobody over there. I mean, it's just amateurs don't do that as easy as it sounds. Okay? So you're like, okay, I'm going to be conservative. Now, the second thing is I'm only going to buy at support. So where's the key support? And we identified this last week as a key level of support. Then yesterday we were in here as a key level of support. And I said there were two opportunities to trade this, right? One, you take the long straight off the double bottom. But is that conservative or is that aggressive? Should we be aggressive in this market? Okay. So that just saved us from a bad trade. Or you treated it like a short-term trade and it was a scalp, right? I mean, if I were to trade this, you know what I'd do? And you'd think I'd be funny. But I would throw down like a 25, 250 OCO. depending on what this actually is. Maybe it's a 5250 OCO. Okay, which means I could do that 5 times to match up my risk reward ratio, right? Because 5 losing trades would be equal to 250. Okay, but the thing is, I'm buying it off that pivot, right? That would be much more important. Now, what I said also yesterday, your second opportunity would be to have it to rise, retrace, and then you buy like that. Is that more conservative? Yeah, because now you're trading a double bottom higher high. So after the higher high would be higher low, higher high, higher low, higher high. And the next major risk is near the central pivot. Okay. See, I could take a screenshot, add 5 bullet points, and I'm making a commitment to myself by posting this at Forex.Today. You could say the market. There are 2 opportunities I see here. I'm a bull. I only see 2 opportunities. One, buying at this level of support, but that's aggressive. The next one would be buying the retracement after the breakout. That would be the more conservative one. And because market's been primarily down for the last 3 months, I prefer the more conservative entry. You need to do that. Okay? You need to do that. You need to do that. Does that remind you of Good Will Hunting? It's not your fault. I know. It's not your fault. I know. It's not your fault. No. Barry wants some oil. Sure, Bear. We'll do some oil for Bear. You need to post your trade plans on Forex.Today. You understand? It's like an emotional contract with your intellectual mind. You make decisions emotionally, and then you justify your decisions logically. You need to post a trade plan every day on Forex.Today because it's an emotional contract with your intellectual mind. And Marina, yes, I get. We need to work on that. Sorry. Sorry. So, anyways, so here's my trade plan on oil, going back April 9th. Actually, we did this April 4th or 5th. Okay, you can see I'm not 100% right. I said it would come down here and then head up. Too simple of a plan, guys? Well, that's the swing. Okay, we set that up first. Higher high, higher low, higher high. And yes, I did draw this retracement before any of this bottom occurred, and certainly before this rally occurred. Can anybody confirm that? That this up, retrace, and up was done well in advance. Cool. Thank you for that. Then the second part is technical analysis, because the other one really isn't. Remember, I base everything on macroeconomics. So now technically, do you think, right, I have this I'm not sure if I've had seen an inverse head and shoulders. It seems to me I would have thought something like an inverse head and shoulders here. I very likely would have been a buyer in here. Okay. So and I guess based on this, that is what I was thinking. So you can see I have it going up and it went down. So I'm not perfect here, but do you see how the overall strategy is the most important part of this? Yeah. Hey, Mickey. Hey, Yusuf. Hey, if I was a jerk yesterday, Mickey, I apologize. Anyway, so now this curve's over, but what's the takeaway now? Let's move this out of the way. Yeah, but still. Okay. You see the monthly swing? There. So, swing traders, do you want to meet Friday afternoons or Sunday after? Well, Friday at noon or Sunday at like 5? I'm thinking Fridays is when we'll try, and then but as a community, if that gets weird because you guys want to be out on Friday night and stuff like that, then maybe we'll switch it over to Sunday, or we'll try a little of both. But what is your thought process? Because we're starting this Friday. Anyone in the swing trading group, remember you have to complete the swing trading course first so that you know what the heck you're doing, and then we can trade together as a live team. Yeah, that's what I'm thinking too as well, Amelia. Right? That's what I'm thinking. Cool. Happy to try Friday. Oh, yeah. Okay. Yeah, my fear is on Sunday we might sometimes find that most of the trades really set up on Friday. We're like, well, you could have done this and could have done that, but well, yeah, it may just be Sunday afternoons better, right? Because here's the upside of Sunday afternoon. It's exactly when your buddy has invited you over to the barbecue, you've been swimming in the pool, and you're tired, and the sun's setting, and you're like, gee whiz, I have Wayne's webinar. you know, like, oh, I don't really want to do my swing trading. I'd rather just sit and drink another beer, but I have to go. And you say goodbye to all your buddies, and you pack up the kids and throw your drunk wife into the truck, and you drive back to the trailer to do your swing trading. Uh, yeah, nice. Two trailer park girls around the outside. Yeah, double wide, like your mama. No. We have the swing traders will have a private webinar room. Because I think we could also have you go through, do your setups, and I give you feedback as well. I mean, it'll be a small group, so we can get really hands-on. So anyways, you see how then this monthly swing sets up? And that's sort of the game on to the previous plan, right? So here's the fractal nature of this whole market where we know the macro move, right? And then we have to fold in the shorter time frames. And sure enough, came down to support where you'd expect it to be, and then it set up the monthly support where you'd expect it to be. The trickier part is this price action, right? In my humble opinion, this shouldn't have come down, but that's the stupid non-farm payrolls. Huh? Stupid non-farm payrolls ruined it. And then boom, it just went back on track, right? That's where, I say, individual news events are not fundamental. That's not fundamental analysis. That's just news. Oh, no, Edward, we'll do our daily webinar. That's fine. Yeah, no. Our daily webinar, that's for everybody. That's for Climbs to Traders Way. That's for Forex.Today. That's our sacred. Yeah, no, but the more advanced people we're going to meet and set up trades as a team. See you, Amelia. Yeah, no. This is for advanced traders. All right. All right, so yens. I think we need to look at, how far are we from the news now? We've got 4 minutes, don't we? 5 minutes, thank you. I guess I should fire up tradethenews.com. Okay. You see euro yen? Yeah, you see that? You should look at it and go, oh, wow. USD yen, very similar. Right? Look at this. Look at that, huh? Perfect entry for bulls, perfect entry for bears. Oy vey. Same thing. Aussie yen, perfect entry for bulls, perfect entry for bears. I don't know who's going to win this. I have no idea. But it does remind me that if you're going to trade, you better trade well. Because if you trade well, you're going to do fine either way. You get yourself in situations where worst case scenario, you break even. Bad, sort of lame. The lame situation is where you only make a little bit of money. And the awesome situations where you make a lot of money. Okay. Look at this pound yen. Isn't it miraculous that it goes from the bottom of the channel to the top of the channel? I mean, it's gorgeous, isn't it? I had two situations. This is a buy zone. That's the buy zone. Oh, the first one worked. Great. Sweet. I didn't like it 2 weeks ago. I didn't like it because, remember, it opened hot. It opened above the entry. Do you remember discussing that the other trades looked like better entries? Yeah, no, Sibo, this is only going to be weak for a couple months, let's say. Maybe even less. Right? So as we approach summer, it's all going to collapse. Check out these moves, guys. This is Kiwi. Look, it barely came down, but it played the moving average. Okay? Beautiful, though, right? At least I wasn't thinking down. So you'll say, though, look, Wayne, that wasn't perfect. Wayne, that would be very difficult to catch. Yeah, but I talked about it 6 months in advance. 6 months in advance. It's nuts, actually, isn't it? It's nuts to talk about that 6 months in advance. It's stupid. How stupid. It's nuts. Thank you, Marina. Thank you. I appreciate that. It's nuts, though. Huh? It's stupid. Let's do it here. Wow, I can't do anything here long. Oh, shoot. You see the predicament? You were supposed to buy it down here.
Minus 0.1% headline CPI 1/10 lower than expected. Core 8.2% is in line with expectation. Year-over-year CPI 2.
You're on that monthly pivot. Remember, this is a profit zone.
Weekly earnings at plus 0.9%, plus 0.6%.
So it's a negative number, huh, guys? Did you catch that?
0.4%, plus 0.3% prior. Headline CPI negative minus 0.1%. Year-over-year is in line with expectation.
You got stuck in the moment, and you can't get out of it. Gotta stand up straight. Gotta carry on, right? So a negative month over month. I guess you're like, I mean, I can't see the candles. All right, all right, all right. Okay, this is a monthly resistance pivot. This is a weekly resistance pivot. What do you want to do? Take it down? And see how that plays out? You're picking a top. I don't have my, I should have had that set already. You got to get yours together. Oops. And where does this go? So I have to redo it up. Stupid. For some reason, this auto trading's been off lately, and I'm used to having it on. Let's do it again. 25.50 is fine. Okay, there's the 25 pip stop. Okay. Busted out the hourly chart, so here we go. Do you see that? Now, I can adjust this. You don't have to have 25.5 OCOs or 25.50 OCOs. Here's a quick little scalp if we do it that way. Okay. Yeah, make sure I hit the right one. Yeah. And of course, I don't need to risk that much, right? So I can pull that down. Okay. Yeah. And I'm just playing the resistance. Okay. Just a little new scalp off of the resistance in a pivot profit zone. There's no statement here. There's no fundamentals here. There's no nothing. Selling off resistance in a sell zone. It might work out. Maybe it does. Maybe it doesn't. Okay. And then you just move on.com. Let's check out the other dollar pairs and see how the dollars reacted. Katie says, I think it's long. Yeah, I'm not saying it ain't long. It's been up all week. But you should have bought it a week ago. Being long now off that news to me is dangerous. So let me go back to that just to point that out. The trade you were supposed to do as a bull is buy it down here. You see how when everything was falling, you should have been a buyer? But that's what bulls do, buy low, right? So I'm up in here and I'm like, this would be a terrible place to buy. Okay. The other thing I could do here is instead of a 15 pip stop, I can make it a little bit longer, higher. So that's a 33 pip stop. And, I could make this, so there's a 33. Okay. See what I mean? So I'm not saying this isn't bullish. What I'm saying is if you were a bull, you were supposed to buy down in here, or you were supposed to buy down in here. Like, let's go back to that euro dollar chart. I had multiple entries for you guys to buy it, but nobody said buy it at the weekly target, right? So let's go back to this setup here, hourly, 15 minutes. All right, you see this? Double bottom, higher high, higher low. Look how obvious that is, right? Off the monthly pivot. I mean, this is gorgeous, right? Double bottom, right? Up, down. You see this? This is the weekly buy zone. This is the monthly buy zone. This is targeting here, okay? So now that we're here, and this started on this, we were doing this on like the 6th. I think I actually drew this. The reason it was like this is there wasn't anything right. Yet to the right, we hadn't developed anything. So I think this trade plan that you see here, we developed on the 6th of April. Okay. So now that we're at the 11th of April, now that we're at the weekly target, and half this plan is the weekly target, buying it now, regardless of whatever euro dollar news just came out, is not the right thing to be doing.
US bond futures extending gains now. The 10-year up 11 ticks, the 30-year more than 3/4.
As Lawrence says, let me get rid of that.
Continuing the 2 10-year.
And as Lawrence says, part of this plan is the fact that the people that bought it down here like they were supposed to, they're going to take some risk off the table, put some money in their pockets, let it drift back down, and then maybe they buy it back on Friday, right? Maybe the swing trading group buys this on Friday and swings it up based on next week's pivots. See, the swing trading group, we're always going to be ahead of the curve. We'll be setting up Monday's trades on Friday. I mean, just the insanity of that, right? John says, do you still see this as an overall trend? Well, has anything changed? No. What's changed? Okay. Where do I want to be? Maybe this chart. Okay. The target for the month, if bulls get what they want, is basically 126. I clearly set this up at 122 as a buy. For a target, I might have even said 400 pips. Yeah, Barry's like, you did. Like, look at everything. I'm drawing channels before. I drew the channel down here, guys. Right? And here's the break of the channel and the retracement. And I mean, there's so many points on this, right? Has anything changed? No. We're on our way here. But where would a bear sell? Let's just ask that. Devil's advocate now. I'm a hardcore bear. I'm salivating. I'm like, I can't wait to sell. Okay? Okay? This is a 618 and slightly, okay, which is the weekly target, and just slightly above that is the monthly target. Okay? Do you think it's possible that this is where the bears start selling? And by the way, anyone that has taken the swing trading course knows that if you hit your weekly target on a Wednesday, you should be thinking at least significant retracement back to the weekly central. You know this. It's a setup for a counter trend trade. So I'm not saying it will. I don't know nothing about nothing. I have this as going up. I want it to go up. I told you months and months and months ago it should be going back up now. Global macroeconomics, things should be improving, right? The only thing that was messing this up was fiscal policy. You start throwing in trade wars, that's going to mess things up. But now we're playing it off like, nah, there's not going to be a trade war, so back to dollar weakness. Okay, that's all I know. Then all of a sudden, something could happen. The president of the United States says something. The president of China says something. There's more geopolitical risk in the Middle East. The Russians do something. I mean, there's all kinds of things that could happen here that just bring this down. What I'm saying is, if that were to happen, I would not be shocked if it happens at this price. And if I'm in a place where I think I'd be a fool to buy, well, maybe I'd be slightly less of a fool to sell. Because the other way of looking at this is if I'm a bull and I think like a bull, and I might be a monthly bull, but what am I assuming is going to happen here as a weekly bull? I'm assuming the weekly bulls are going to take profit. I'm hunting their stops. See, some of them are like, ooh, I wonder if this is going to be long all month. And all of a sudden, one red candle in that red zone on the weekly, all those weekly bulls take their profit. I just scalped it. I'm hunting their stops. I'm helping them make the decision. See, they didn't have the discipline. They didn't have the discipline. You see this candle here? Let's get into a, let's see if I can squeeze this on a 15-minute chart. This, you see what happened here? Somebody had discipline. These guys are sweating bullets and they're thinking, I should probably get out. I should probably get out. I should probably remove myself. I should probably get out. I'm going to give up my pips. Someone down here just cold-heartedly bought it like they were supposed to. Cold-heartedly took profit like they're supposed to. Okay. Treasuries dropped 400 basis points, right? So are we in a bear market? Right? Yeah, we're in a bear market, right? So why wouldn't it fall 400 points? When I moved to Georgia 10 years ago, I did a I did a webinar. This was when I ran FX Bootcamp every day. And I did a webinar for people, and I gave a 10-year prediction, 10 to 12-year prediction. It was a whole thing. Because I predicted the financial crisis, and I know that sounds super arrogant, but I did. I mean, we talk about it every day for a year. No joke. Anyways, after selling my house and moving to the other side of the United States because I knew the real estate market was going to crash in California, I hadn't even moved into my new house yet. So I had temporary digs, and I was in the pool in the backyard doing a webinar, had my laptop up. I might have been smoking a cigar. And I remember thinking, man, there's bugs everywhere in Georgia. Like, you'd open up your laptop, and when I was done the webinar, I'd shut it, and there were like spiders like this on the back of the laptop. Behind me, there were leaf bugs. They look like leaves, green leaves. I'm like, why are there green leaves on the wall? And they start moving. I'm like, oh my God, I'm in Africa. I'm in the Congo. Anyways, I gave a 12-year prediction, 10 to 12 years. And I said around then, I would expect to take my whole entire portfolio, which we got, remember, we sold our house and everything else that we possibly could right before the crash, and I mean weeks before the crash. When I got to Georgia, my closing was the day after the Fed cut interest rates for the first time. That's how accurate it was, right? So anyways, based on that, I had gone all in. I cashed out of the entire market at the top of the market, sold everything before the crash. So I was really sweating bullets for a couple of months. And then finally everything crashed. I'm like, oh, thank God, everything crashed. Thank God. So then we were talking about it because people are like, holy smokes, Wayne, that was a good trade. And I'm like, yeah, it was a good trade. What about what's next? Like, I expect to rebuild everything, get back into real estate, get back in stocks and bonds and all this, stocks primarily, right? and grow everything. And I think 10 to 12 years out, we'll get to the point where interest rates are high in the United States again. And we'll be at a point where the Fed won't be able to raise interest rates anymore. U.S. companies will struggle to be profitable. We'll probably have an inverted yield curve. And then I'm going to sell everything again, probably downsize my big mansion to a little mansion. And then, put everything into bonds. So, right. So when the bond market falls 400 points in a day, I'm like, good. It's just beginning. It's going to be a huge bear market. Huge bear market in bonds. And I'm waiting. Now, I'm at that point now where it's really like the next 4 or 5 years, maybe this other stuff will happen. And my guess is still valid. I think the timing is still pretty good. 10, 12 years, that's 2025, 2026 or whatever, 2025. I don't know, whatever, do the math. I'll move over everything into bonds and maybe retire. Because that market's just going to skyrocket. That's going to be another 5-year move or 4-year move. Right? So here's the interesting thing. Well, by retire, I mean just do something, we'll do something interesting, right? Because there is no such thing as retiring. There's just death. So here's the interesting thing. Here's what happens. The stock market will probably have a big year. No one will be in the bond market because the stock market will still be going up 5, 10, 15% a year. Why would you want a 5% bond? Right? So the coupon payments will be rising to attract people. If you can get 15% in the stock market, 5% in the bond market, it's not going to be enough coupon payment for you, right? So anyway, it'll go from 5 to 6 and 6 to 7. I remember a couple of years ago, 2 years ago, I sat down with my nephew. He had some money to invest. And I said, look at this. You can buy a Ford corporate bond paying 10%. Okay? Amazing, right? So anyways, but if the interest rate's rising, the price of the bond is falling. It's just think of it as gold, right? If you're a buyer of gold, you want gold prices to fall. Okay? Okay? So in that point, wouldn't that be interesting is we want that bond market to keep falling. So then you can buy a bond for cheap, right? Imagine being able to buy a $100 bond for $99. Plus you're going to earn 5% on top of that. So then you can say, well, per year, that's actually 6%, right? So anyways, so you buy the bond for cheap. But how about this? So you're like, but Wayne, so you're getting a deal on the bond, you're buying it cheap, the price went down, and it's paying 6% a year or 5% a year, whatever it is. But the stock market's only up 10%. You're like, Wayne, why are you giving up? You're losing 5%, right? But realize all the things I'm trying to do is predict the future. So if I'm right and the stock market falls 30%, and I'm holding a bond that's paying me 5% a year profit, what do you think happens when people decide they want to sell the stock market because it's falling? They're losing money hand over fist. What do you think they actually end up wanting to do? Especially if my bond is a treasury or a high quality corporate bond, everyone goes into bonds. Usually late though, right, Katie? After they've lost 25%. So all of a sudden, my bond is worth a lot of money to a lot of people. Everybody's dying. They're like, I'm losing 20% of my net worth in the stock market, and I'm probably going to lose more if I don't get out. Like, oh my God, what am I going to do? Sell me your bond, sell me your bond, sell me your bond. Now, the coupon payment never changes. I still earn the 5%. But 5% looks really good when everyone else is losing 20, 25, 30 negative, right? So now there's a bidding war for people. They're like, sell me your bonds. It's just an asset. Sell me your bond, sell me your bond. I'm like, really? I might want $105 for this $100 bond, right? The face value might say 100, but it might trade for 105, 106. People are like, just get me out of the stock market. And now I have to decide, do I take the cash today or do I sit on this income stream? So that depends on opportunity cost, and there are calculations for that. So what you say is that, if I sell this guy my bond that I bought a year ago for cheap, now he wants to overpay me. It's like I'm being paid for 2 or 3 years of income stream based on coupon payments. And then I know cash is king, right? So if you think you have a good opportunity, then you think, well, what's happening to the real estate market if the stock market's falling and people are losing their job and disposable income is falling and people are eating their savings and people that couldn't afford their home, they're dumping it. So I have two choices now. I can sell part of my bond portfolio, take the cash, and now buy real estate when everyone's selling real estate. You see what I mean? I'm buying bonds when nobody wants to buy bonds. And then I'm switching from bonds once I got my cash, and then I can flip over and buy real estate when nobody's buying real estate. But isn't this the stuff you're supposed to do? But the other thing you could do, if your bank needs you to keep the assets with them, because now they're probably struggling to have real assets, you could borrow against your bond portfolio. You could say, well, I have this bond portfolio, I bought everything below face value, but now they're all trading above face value. Can you give me a loan to value of, let's say, 70 cents on the dollar? So let's say I own 10 million. Can I borrow 7 million and use my $10 million worth of bonds as collateral? And now I take my 7 million, and I go out and I buy a whole bunch of real estate. Kitty, it wouldn't be a double bottom, it'd be another retracement. So again, I'm not talking, not talking now, I'm talking about another 5 years from now, maybe, right? So, but this is the level of detail I try to put into my personal planning, okay? And like everything, people are always shocked that I do it. And then they're like, oh my God, that son of a gun did it. But how do you get there if you're not thinking ahead? I'm begging you guys every day to post a trade plan, to plan what you're going to do later today or tomorrow. And like, right? Oh, Wayne, I can't think about tomorrow. Wayne, I can't plan out next week's trades. I mean, that's a big part of the swing trading group. We're going to plan out next week's trades in advance before the pivots have even developed. You know, wicked smart, right? Like my shirt said the other day, wicked smart. Well, you got to act like it. You got to fake it until you make it. Just right. Barry says I have all plans to trade for next week. Great. Well, I'd like you to post at least one of them. Okay, and say here's what my bias is. Here's the currency pair I think that's setting up, and if so, here's one or two opportunities that I'm considering. And look, if you can't do that, I just don't know how you're going to be a professional. I just don't know. I mean, trading's fun. I thought I had this idea the other day, like maybe I do like a scalp club for a week where I just make 200 trades in 5 days. People would love it. People would come all over. Oh, Wade, yeah, they come over and they want to see and watch him do it. Look at this guy, and he's doing this and he's doing that. It's so fun, and I'll have music playing, but it's stupid. Okay, Barry. So some people are having problems, some people are not. I'll have to double check. Okay, I hired a new developer, so I'll have her look at it. Okay, so anyway, planning tomorrow, planning next week, planning next month, planning next quarter, right? Planning 2 quarters ahead. You know I do that. Planning next decade. It's right. You know I do it. You know I do it. But the thing is, I want you to do that. Yeah. So, okay. So anyways, peace on earth. May the pips be with you. May your profits be above average. Oh, by the way, how's my scalp doing? Think I'll move my stop to break even or what? Where'd it go? I don't even see my stop. Where'd my stop go? Oh, the auto stop is sad again. What the heck? Oh, there it is. I see it. Okay. I'm in a situation where I can't lose money. Not bad. Yeah, you're right, Hans. Now keep it. Hey, this is a family show. But Katie was thinking it too. But anyways. So anyway, peace on earth. May the pips be with you. May your profits be above average. I love you. I care about you. I want you to succeed. I want you to post on Forex.Today, and I want you to open a live account at Traders Way. That's how you pay it back, guys. If you don't do that, then the circle of life fails. All right? You understand? That there is a commitment on your part. There is a cost on your part. Okay? There is a cost. It's not free. You need to open a live account at Traders Way, and you need to post your trade plans. I will have the new programmer try to figure out all these problems and fix them for you, okay? Cool. Bye-bye.